IVM.
The world's most populous democracy is now witnessing the dawn of massive technological and demographic change, which could radically change the way we relate to financial services and their provider. This is driving innovation across the spectrum of banking services, digital identity, credit rating, stock trading, loans, and payments, all accessible with just a click of a button. However, realizing these state-of-the-art services requires a concerted approach to unpacking complex transformations and orchestrating seamless exchange of information and data between them. Hello, I'm Shiladitya, and in today's episode of Capgemini's Techipedia series, I'm joined by Sudhir Pai, the Executive Vice President and CTIO for the Global Financial Services business at Capgemini, and Srikanth Mopidevi, MD and CIO at DBS Bank India. In today's insight-packed discussion, we'll be talking about the current global outlook, the evolution of banking, rapidly changing consumer behavior, dealing with complexities of technology, and so much more. Let's take a quick break as we get ready for this very insightful conversation with both of these gentlemen.
If you're a cricket fan, check out Edges and Sledges, India's favorite cricket podcast.
The podcast focuses on Indian cricket, the IPL, and has a ton of banter both on and off the field.
We talk about the week's biggest cricket stories with current and ex-international cricketers, coaches, or sometimes just between us.
And it's hosted by me, DJ.
Me, Varun.
And me, Ashwin.
New episodes release every week.
You can catch us on the IVM Podcast's website, app,
or wherever you get your podcasts from.
Check out the Edges and Sledges Cricket Podcast.
Welcome, Sudhir and Srikanth, to this episode of Capgemini's Techipedia. Thank you so much for being here. Welcome to the show. How are you doing today?
Excellent. Great.
Thank you. Thank you so much for being part of this conversation. We are obviously having a great series here with doing the Techipedia series, and we're talking about a lot of broad topics in each episode. It's great to have both of you here today who have done so much work, I would say, in technology and in the global finance technologies. So I would love to sort of jump right into the conversation about our topic, which is basically the post-pandemic world of banking. And this is something which touches, I think, everyone, everywhere in all their lives. There is some sort of financial, post-pandemic impact on the way people manage their finances, maybe way people transact, the way infrastructure has changed globally. And, while the pandemic had and will sort of likely continue to have a significant impact on overall how you guys and various financial institutions administer their business, what do you think are the various sort of, implications for individual players in the ecosystem? I'd love to, make that like my starting question, and maybe I'll ask either of you to, get started with the answer first. Sudhir, maybe first.
Yeah. Thank you, Shiladitya, and Srikanth. Hello. Nice to connect back as well. So I would probably answer this in two streams of thought. So first of all, yes, of course, we know that pandemic and now post-pandemic has accelerated the whole digital adoption, right? So things are being digitized and the ways of working has changed dramatically, and there's significant acceleration in all kinds of initiatives around maybe cards, payments, cashless, and etc. So we have accelerated that digitization significantly over the last 2 years. And when I say we, across the board, all industry. But more recently, and I was in Europe for the last few weeks, the new thing that is emerging, and this is purely because of the situation of interest rise and the other drivers that are out there, is about the risk and how to manage risk. I think that is emerging as a topic of interest for pretty much everybody in financial services industry. The volatility would require attention to risk. This conversation of newer ways of risk management, newer ways of capital allocation, new levers for operational efficiency, those type of things. So in the incumbent world, that's the discussion I keep hearing. In the neo-banking world, the discussion would be more around profitability of the business and, innovating new products, moving away from just the savings or the mass consumer business to more precise wealth and other areas. And of course, in the fintech world, there's quite a bit of intense pressure now on raising funds and looking for something which is really tangible and opportunity, as opposed to just everybody getting everything, which you have seen in the last few years.
Interesting. Srikanth, you've obviously been, one of the players in this ecosystem, and probably I would, if I were surmised, even early in the overall, let's say, digital adoption of various components of banking. So even pre-pandemic, how have you seen this, sort of change from the inside view?
Absolutely, Shiladitya. First of all, thank you for having me here, and very nice connecting back with you, Sudhir. And probably build upon what Sudhir just mentioned, because he's touched on quite a number of important trends that are emerging. Plus, at the same time, he sort of teased into some of the evolution that is borderline innovation in some level, right? So maybe I'll touch on that purely from a technology angle, and then probably overlay the banking elements on the industry elements around that. So number one, risk. That's something that everybody sort of wrapped their head around now. Earlier, it used to be that some of the industry players, some of the corporates used to be very well versed with it. They know how to manage it, and so on and so forth. In my opinion, I don't like to call it post-pandemic quite yet, but then in the post-pandemic world that we are in right now, I think everybody sort of understood, even at a consumer level, understood what does risk look like: operational risk, personal risk, and various different facets of it. So that's number one that I'm seeing more prevalent across, and people started appreciating what it takes to manage those risks and the importance of managing those risks. That's number one trend. Number two, while corporates do a thorough job and regulators do a thorough job of managing those risks, everybody started wrapping their head around how do we bring in technology innovation to be able to manage these risks as well. I think that's another trend that I see very vibrantly unfolding. And there is this, interplay of technology plus corporate plus consumer, all of this coming together to actively do a good job of managing those risks, number one, and gear it towards more higher order, important elements. For example, sustainability, right? That has come out into front and center focus right now. So the way I look at it is there is all this intermesh of these thoughts that are happening at an individual level, at a corporate level, at a technology level. But the mesh of those are gearing towards a higher order purpose, if I may call it so, towards sustainability and towards better living, greener, and so on and so forth. So that's really the trend that I see unfolding. And to the second part of it as to how, because we've been an early player in terms of embracing technology, driving a transformation journey from bottom up and so on. This is, and I'd really like to say that we've caught on to this trend early on, from being best bank for the world to the best bank for the better world, and are sort of driving that agenda forward. And we started embracing multiple elements of it. For example, everything that we do right now is around green. Everything that we do around right now is around, saving for efficiency and so on and so forth. So that's one segment that is happening. Second segment, digital, the way we see it has become table stakes. While industry at a broad scale is, coming up the curve in some areas and so on and so forth. But if I take a step back and look at industry broad scale, it has become table stakes. The second order then is, how do we make sure this technology is sustainable, will continue to be relevant, and will continue to make sense in a volatile environment that we are in, right? So that's really some of the things that I'm watching from a tech angle, Shiladitya.
Wonderful. Thank you for that. And, just a quick follow-up on that from either of you as well. You mentioned obviously that risk is this sort of common thread that both of you picked up on as one of the major influencers of every decision you make, every product you release, everything out in the world going forward. At the same time, this has also caused, the pandemic has also caused a lot more people, like you said, to, envelop digital banking. And one of the artifacts of that is that a lot more newer age people, let's say younger population, are coming into the fold of digital banking, which they probably, or financial services of various forms, which they were not previously exposed to, or previously were not even thinking about. Younger population especially probably was not using so many financial tools like the various products out there, and whether it's a neo-banking tool or whether it's a buy now pay later product. So how does risk sort of play into these new age products and this new age I would say customer that you're also having to deal with? I just thought it would be interesting to hear your perspective. Maybe you can continue, Srikanth.
Yeah, so it's an extremely important insight that you brought about, in the sense that the new age customers are not the traditional players in several sense. Because earlier we used to be able to say, here is a persona and the persona behaves in a certain fashion and so on and so forth. Now, it has now literally come down to n equal to 1. There is no personalization. It literally has to be driven to n equal to 1, because each new age customer in that sense started behaving and embracing and looking at risk from a different lens, and it is extremely personified. So very, very complex topic to deal with. But the good news in that segment also is that's where the evolution that we are seeing in the AI and ML technologies is helping quite a bit. In the sense that, the kind of depth that we have developed around leveraging ML, leveraging AI, especially things like NLP and so on, which can peel the surface and go much, much deeper into what is the real ask or what is the real purpose for which the customer is approaching you, whether it is for service, whether it is for product, whether it is for something else. There is a degree of higher order predictability that is now surfacing, and I think that is helping quite a bit. So that's one element. The second element, from a risk standpoint purely, the newer age customer segment, if I may call it that, sort of broad categorization there, is looking at things that are very, very agile and flexible and literally want choice. The choice presented upfront rather than the customer wanting to come back and then say, hey, can you give me something else? Right. So the choice has to be presented upfront and leave it to the customer to do the risk assessment. There is a degree of circling back to the corporate to say, can you do a bit of a hand holding for me and make an assessment? But that is far and few. But the customer by themselves is demanding in a lot of ways to say, present all the options to me upfront. I will do my own assessment of it, and then I'll make a choice. And then, of course, we'll go through the journey together. So that's a big shift that is happening here from a persona to n equal to 1 and hyper-personalization. I think technology has got a big role to play in that area, I think. Sudhir, any thoughts from your side?
Literally making notes, and like I always enjoy conversation with you and DBS as a bank, because you are always leading edge in terms of technology and quite nice pointers that you raised. The observation I also wanted to build on is that, in our own survey during the COVID time, it was fascinating to see over 90% or 85% of elderly population are now into digital or fully digital area. So I think to assume that it's only the next gen, new gen are going to use digital products and services may not be true going forward, because digitization is now probably across the board. And as a bank, I think one would have to look after probably the all segment of customers when you digitize, and not necessarily only one segment of customers. So I think n equal to 1 probably helps in that context, because the adoption curve is now broader across the segment.
No, that's very nice. Thank you, Sudhir, for adding that point. In fact, to continue on the same sort of vein of newer technologies and the newer audiences, another question which I had is actually a little tangential one, which is, when it comes to newer age banking and digital banking, we probably were much more familiar with the methods and modalities of, let's say, using our phone, using our laptop, and various internet services that already existed. It's just using them deeper and using them more comprehensively. But one of the other trends which has obviously also picked up, especially in the last year or so, is the concept of even the metaverse and the virtual reality. It's sort of come back, I would say, in its second or third coming to our world. But now it's a lot more actively being participated by various players, such as yourselves, such as institutions who traditionally stayed away from this platform. What is your take on digital banking or virtual banking or metaverse banking, whatever you may want to call it? And is that even real? Is that here? Is that being embraced by both, institutions like yourselves as well as consumers? I'll ask Sudhir this from your perspective first.
Look, I guess I was trying to jump at this because I think every conversation, wherever we go, there's a discussion of metaverse and DeFi. A couple of perspectives, right? So one, I would like to call out. We published a paper on Forbes, which articulates 5 zones of evolution of banking. That if you look at an incumbent bank moving towards how the trend, you have traditional banking, you have digital banking, which is digitization of existing processes. Then you have open banking as a segment where you have looking at all the banking as a service and those type of stuff. then till this point in time, you're playing with fiat currencies. That is the currency that we all know. And then when you shift into zone 4, which is the decentralized futures or DeFi, you start to introduce new tokens or currency mechanisms, which to me is a foundational change or the shift in thinking, right? So that's where now you see on one extreme you have all the cryptos, which we say blockchain native or cryptos, and on the other extreme you have central bank digital currencies, right? Most of the countries or central banks have in the process of rolling out. And in between, you have stable coins, which are primarily used for intra-bank transfers and so on. So that sort of zone is emerging. So if you fast forward that to fifth area, then we are saying that you have digital and open banking, and you have new ways of currencies, which is tokens, and now you have a virtual world as well, so which is so-called the metaverse, right? So which means if I'm bank's customer tomorrow, bank might be able to view my physical assets and digital assets. Bank may be able to visualize my digital identity of an avatar and KYC in the metaverse or virtual world as well as physical world. So I think we are getting into this world. There are more questions than answers when it comes to metaverse as an enterprise wide. But if I summarize all the conversation we had with the industry, there are 3 areas of use cases today probably banks are exploring in the metaverse world. One is, of course, how the experience would look like, which is the AR, VR++, the augmented reality. And normally you start with running some events or sponsoring the events and those type of things. And you have seen banks announcing some offices in public metaverse like Decentraland, Sandbox, etc. That's sort of one area, experience. The second one is risk, because we spoke about risk. I think risk is a big thing in banking context, because everything we do in anywhere has to cater to the regulatory framework risk. And in this case, risk is mostly driven by the privacy and data protection and all those things that you're not thought about. And the last but not the least is the revenue. Where will bank or financial services make money out of metaverse, right? So it is the digital assets, NFTs, or payment mechanisms, or lending, or even insurance, and so on. So there are those areas have been thought about, but all in sort of progress. So to summarize, I wouldn't look at metaverse as a metaverse because everybody's saying I should be in metaverse from banking. I would probably look at it as an evolution of banking, and in the context of banking, looking for the opportunities as it evolves.
Srikanth, would you love to add to that? I have one point though. You mentioned, Sudhir, that, obviously like all things DeFi, which is decentralized finance and things on the blockchain, the whole genre of that technology is all about transparency, openness, putting things out in public. Whereas banking and, finance traditionally has been very private. Or rather very closed door. It's a big change, I would say, for consumers who are, while they want to embrace new things, and as technology partners, everyone wants to do it. That's also another point which I thought was interesting. How you keep things private and safe and secure while also being transparent and open. So it's an interesting take. Srikanth, would you love to add?
Yeah, in fact, I'd love to build on both the things that you just mentioned around the privacy and the context around it and stuff like that. And at the same time, what might be the right set of use cases for metaverse, especially from a banking world, right? And then maybe anecdotally, I can share some of the stuff that we are actually exploring or experimenting with right now. Going back to the comment that you made earlier, Shiladitya, is metaverse real? I mean, it can be as real as it can get right now. So it's absolutely real. It's absolute certainty. And in my personal opinion, it is just a matter of time before it becomes reality, the pun intended in that, the virtual reality. So that's a given. We've got to embrace that. The form factors are shifting quite rapidly. And, we have to, and that's where the journey of changing from the so-called digital form factors that we have today to the new age Web 3.0 form factors is really crucial for organizations across the world. And there is quite a bit of a work that is still pending, right? I mean, there is still work that is underway, AR, VR, whatever have you. Coming to some of the things, whether it is Decentraland, Sandbox, whatever, the early on thinking for metaverse was, let's go set up a branch. That's traditionally how the bank branches were. And the thinking at that time is, efficiency, being able to open as many as you like. In the real world or the physical world, you don't have to go to the same pains in the virtual world, so on and so forth. But pretty soon, that turned out to be not so effective a use case. And the banks now started looking at it in a different lens and say, all I'm doing is I'm shifting whatever is happening in the real world into metaverse. Really, I'm not leveraging on the promise of what metaverse can actually deliver for me. And that brings to the point that you just mentioned. I can solve for a number of things around privacy, around risk, around context, around hyper-personalization. All of these things can be delivered in a scalable, realistic, and elastic fashion in metaverse. Whereas in a real world, that comes with an extremely high degree of complexity, an extremely high degree of regulation, right? So that's really the cusp of the reality dawning on and say, you know what, we should actually be, instead of going after the usual suspects of opening up branches, opening up a corner shop and so on, I can actually harness the full power of what metaverse has to offer for me. So in fact, we've gone through the same journey, and we said there are 2 or 3 areas in which we can actually leverage the power a lot more of what metaverse can do. Number one, our engagement with our customer from an empathy standpoint today is through a particular medium only, right? Whether it is mobile phone, chatbots, and so on and so forth. It doesn't, chatbots for that matter, right? Conversational AI is still a little far away in terms of our ability to embrace. We have chatbots across the board, but it does not bring in the emotional facet, right? Mm-hmm. And that has become quite a complex challenge by itself. So, whereas if I cut over into metaverse world and invite the customer to participate in metaverse, my ability to deliver this experience in an emotional, interconnected, in a hyper-personalized way goes up exponentially higher, right? So that's really the use case that we are now looking at and saying, can we potentially have a corner where we are inviting customers to come co-create the product with them?
Yeah.
That goes back to my next point, which is N equal to 1, is all about inviting the customer to participate in bundling the service, bundling the product, co-create, thereby increase loyalty, increase stickiness, and various different facets of the business that comes naturally with it. To me, that's really where metaverse's true power lies. And we got to sort of reimagine how we might leverage that to the fullest potential in solving some of these elements. So that's really what I wanted to talk about.
It's an interesting point, Srikanth, you made, and that sort of builds on few things which we are trying to do or in the progress within Capgemini, as well as on the talent engagement. Because if I look at employee experience, which is as critical today as consumer and customer experience, right? So what we have done is we have done the mapping of the whole talent journey from talent attraction to recruitment to training and development, retention, even rejoining, and look at what avenues we can use something like metaverse in each of these buckets. For example, we ran a recruitment fair on metaverse a couple of months back in the US with 5 US universities, and it was super successful in partnership with LinkedIn. And then now we are looking for, in the retention mechanism, various employee NFTs as a concept. And this is not so much of NFTs for the sake of trading, but NFTs for rewards and recognition, NFT marketplace where I can show my badges that I've earned, etc., etc. So I guess there's an interesting theme coming up in metaverse, going back to what Srikanth said of engaging in a different way, be it consumer or be it your own employees.
No, this brings me to in my next question already, which was actually, what are the steps? Sudhir, you mentioned briefly on some of these. What are the steps for let's say, Srikanth, banking, provider like yourself to actually embrace this change? Because it's probably not easy, right? It's a lot of commitment and effort from your side. You have a lot of legacy, let's say, technology platform, ways of working, processes, team, members of the team. So there's a massive amount of transformation that you also have to undergo. And I'm sure this is a long-term sort of plan, which you've started to embrace, like you mentioned. But what are those steps? What are those I would say, how are you operationalizing this? And how are you doing it in a timely manner so that, you don't keep transforming and then lose, let's say, the pace of, being in touch with the market. So would you like to touch upon that?
Yeah, Shiladitya. To be perfectly candid and honest, I don't know if we have a right answer yet. But what I can share is the steps that we think are the right ones at this point in time, because we are doing a lot of experimentation around that to really distill and say, can we do this on a sustainable, repeatable, predictable way? So a few things that we have done, right? DBS traditionally has been very big in experimentation, being able to, make it bite size, chunk size, launch it and learn from it, bring it back into the loop. and see how we improvise on top of it. That's been our modus operandi, if I can call it that. Make it small, launch it fast to the market, or invite somebody to participate along with you, and then we continue to learn. And that's precisely what we've been doing here as well. So some of the things that I just touched on: one, to see in the newer products or the services that we're launching in some specific markets, we wanted the customer to participate with us so that we can co-create and then say, yes, if it is satisfying here, it might go for a longer haul and stuff like that, right? So there is one thread that is running in that sense. The second thread, we are looking at our relationship managers and saying, how can we dial up the empathy of the relationship managers that engage with some of their clientele? The third element is, can we now democratize relationship managers in the sense that relationship managers traditionally used to be for high net worth individuals, private banking and so on. But if I can create a concept of Sky RM or Sky relationship managers, can I now democratize it across for a much larger pool of customers and so on? So there is that thread that we are also looking at as a Sky RM as a concept. To Sudhir's point earlier, we have something called a distinguished engineer and senior principal engineer and so on. These are the titles. Those individuals started receiving NFTs rather than the traditional, here is your award, here is your plaque, and so on and so forth, right? So that we have already institutionalized within the company, within the organization and stuff like that. So the idea is to run several of those on a repeatable fashion and see which one of those has got the legs and the right way to operationalize, and then sort of launch it back into the public forum there.
Wonderful. Sudhir, globally you work with so many other, banking customers and providers as well. Have you seen more interesting, other interesting trends also emerging in how they're embracing this transformation? And maybe even from Capgemini's side, I think you mentioned various programs that you already have. How do you put this framework together, and what do you see rolling out?
I guess the ways of working, talent engagement is definitely number one priority, no matter which part of the world you are in. Today's context, I think you call it as talent war or whatever phrase that you want to use. But I guess sheer pressure on speed at which the things have to be done would require a talent engagement in a very different context. Now, I mentioned about recruitment fair as one example, NFT employees as another example. Very similar sort of thinking and use cases, like Srikanth was saying, across the board. We're doing for some banks in the UK. Everybody's interested in a very similar, what are the steps and how will I go one step at a time? So it's normally, we call it as now, new, next engagements of talent, right? So you need to address a few things quickly. It's not just everything has to be in metaverse, right? So, but at the same time, constant engagement. So it all started with hybrid working environment, and it started with the role of a manager, which got sort of redefined in this context. Then we have architect program, which is similar to the distinguished engineer that you talked about, which is a group-wide initiative of engaging and nurturing architects community and etc. A number of entrepreneurship programs, right? So always we used to have hackathons for many years. Every year you have multiple hackathons. But this year we sort of changed the sequence of saying, instead of having many hackathons, let's do one where we can, the outcome of this can be built more precisely, give the freedom, do the entrepreneurship, do the seed funding, pretty much like a VC, and help encourage, build those ideas internally. So there's a number of programs around talent. I guess different clients are using in different contexts. But yes, I'm quite excited to see what Metaverse has to offer in this life cycle.
And maybe if I may add one more very interesting sort of data that is emerging for us, especially Sudhir. We've done a bit of analysis to find out, and turns out there is about 3.2 billion players in the metaverse, because the first thing that comes to everybody's mind when they talk about metaverse is the gamification of it, right? And the games that people tend to and all that. So we've done some analysis and found out there's about 3.2 billion users in the game universe of metaverse. Whereas the physical sport, you'll barely find maybe 500 million, right? Who is actually engaged in physical sporting activities and so on. So one of the dimensions we're looking at is how do we marry these two? Because the most naturally understood language in a metaverse today is gamification, and people coming there to play games and stuff like that. With the advent of crypto coming in, central bank digital currencies, well, of course, metaverse is already there. 5G is the reality, more or less. We've got AR, VR coming in. But the tipping point for person, I don't want to call them consumer quite yet, but a person to come in is really the draw is the game, right? So can we use that to invite them into metaverse, and then you open up a host of possibilities that can happen, and banking will become a thread that will bind all of this together by leveraging whether it is crypto and so on and so forth. So that's one of the things that we've been very actively exposing.
No, this is very good, very good, and I see also seen that segment of consumers where you can call them as creators or artists type community, right? So even they are in this sort of world because they are in demand for creation of digital collectibles, NFTs, and those type of things. It might be for gaming, it might be for any other purposes. So personally, my first experience was, in January when Australian Open happened on Metaverse Decentraland. And we had some ecosystem partners who were party to it, and I could see a few complete, different contrasts between the actual match. Lucky enough to go to the finals in person, and also watch it and play it on Metaverse. And you see a good difference between the two, right? So the community that is in Metaverse is very different to the community that is in person attending. To be honest, the people who attended the final, I'm just talking about semifinals, finals, would have paid hundreds of thousands of dollars. They are pretty wealthy corporate. They had absolutely no clue that there is something called Metaverse and something is happening in Metaverse. And there's entirely new community which were in Discord and in all these communication platforms, which were very active at late night, saying which NFT you're going to, which ball you're going to bet for, and what were your today's session, etc. And those tens of thousands of people may not be as wealthy as those who have attended in person, but they're more passionate in investing this and being party to. I'm just seeing that sort of contrast where when we talk about the world still today, going back to Srikanth point, it's pretty much around gamers and the ease of use. They first jump into Metaverse, and because it is daily thing that they do, they spend 6-8 hours in gaming, so it's not a big deal for them. Whereas for the rest of the community, we have to make deliberate efforts to learn and see there is something new, and there's more hesitation, right? So what I'm saying is it is going to take some time for more wider adoption outside of that community, and that will probably trigger more capital flow and more investments that have been made to build more tangible things around Metaverse.
No, thank you for that, Sudhir. In fact, I think you already touched upon the final thread which I was going to ask, which is basically what are those permanent things which you see are here to stay when it comes to consumer behavior, consumer trends, right? Like what are those things which people have started embracing, or your consumers, your customers have started embracing, and both of you touched upon those points earlier about how gamification has sort of led to people trying these things out, trying out the metaverse, trying out new technologies, but things which are the key trends reshaping banking as we know it, from everything which you mentioned, like the digital experience to sustainability and risk management. As closing notes, what would you like to say, Srikanth, maybe first, as the final word on what are these consumer trends that you think will now play out as this future unfolds?
Yeah, I guess from my perspective, the most prominent one for me is the wellness and the sustainability agenda that has become front and center for practically everybody, and that we can see unfolding in a number of discussions that we've been having with our customers, with several different players in the market. I mean, the industry by and large has now come to terms with the point that it is not just about conducting business, but there is a higher order element, there is a higher order business that we need to rally around. And that is front and center as far as we're concerned. Second, the tipping point of, is digital for me? Is digital not for me? Should I still prefer face-to-face versus, is there a better way? I think Metaverse in some sense will bridge that gap of what is physical, what is face-to-face, and what is in the Metaverse university and stuff like that. I mean, that is still emerging, but I see that is a prominent demand that is coming in. Thereby goes to the point that I was making earlier. It is about choice. I want to be able to engage in a physical world. Yes, I mean, that is still something that I don't want to write off, but I still want to do some amount of virtual elements, and I want to do it on my own time and be able to continue to engage in the service and product. Those are the two big trends that are more prominently visible for me, Shiladitya. The underpinnings obviously is the trust and the risk, and continue to have that kind of an ability to transact. in a more real term and agile fashion. It has to be more real term.
Yes.
Sudhir, any thoughts
to add to that?
Look, I guess a couple of things, maybe extension of this discussion. So we started to call it as Experience Square, which is our Technovision, which we publish every year. Experience Square is a word we use, that experience is now not just consumers, it is equally important for employees, for agents, for third parties, for everybody. So it's sort of coming out of, I'm doing something just for the sake of consumer, because a consumer can today and in future can play different roles. So it's basically uplifting the experience and engagement across the board. The second one comes to mind is sheer focus on inclusion and the economy that is driven by SMEs and those sort of segments that are, we always talk about them, but they're never on mainstream. So mainstream was always these mass banking and the so-called the retail customers. But now I guess the focus is switching quickly into how do we rebuild the economy, how do we get more smaller businesses encouraged, etc. And in the mass or retail business, more on the inclusion side of financial inclusion side of things. The third thing I would think, maybe not immediately, but in near future, I would think we will live with the multi-format, multi-currency sort of situation. So we'll have tokens, CBDCs, cryptos, currencies, all coming into play in the mix. So there's going to be advantages and disadvantages. So it probably makes the life of technology and interoperability, interlinking, cross-border a lot more complex, but might be beneficial from consumer side, where we all can save a lot of fees and transaction fees, and it might be seamless and choice will be with consumers on the currency going forward.
No, thank you. Thank you for that, Sudhir and Srikanth. Both of you, I think, have shared so many important points, which are very, very relevant, very, very, I would say, real, in spite of these things happening in the metaverse or happening in virtual reality. But, just as closing notes, I think what the theme that we caught on is that the post-pandemic world of banking is very much a world which is actually a lot more personalized and a lot more in touch with consumers than it was, I would say, before this. Because before this, banks and financial institutions thought maybe a product first thinking, as I am a provider of various products, whereas now I think you're shifting to this consumer first thinking and the various concepts that you brought to light today, whether it's that N equal to 1 version of how to deal with your customers, to both to internally as institutions as well, how your processes are changing, how you're evolving to embrace this new needs of both your consumers and your company. Thank you, gentlemen, so much for this enlightening conversation. Thank you so much for sharing your views. This is definitely going to be one of the very interesting episodes of our series here, talking about a lot of new concepts. And I would love to thank you again for your time and for sharing your views. This was a lovely conversation.
Thank you.
Thanks, Shiladitya, and a big thank you, Srikanth, for your time. Really appreciate it.
Likewise. Thank you so much, Sudhir. It's always a pleasure.
Thank you.
Bye.
Bye.
So thank you, everyone. Like you heard with this really insightful conversation, I think this pandemic was a major test for all global banking systems, and especially even in India as well. And what happened is this forced banks to use a much more digital approach to incorporate the needs of the people. And in many ways, the COVID crisis acted as a catalyst in making banking systems move towards a more tech-based era, for their consumers. And of course, as we heard, there's been so much movement. There's been so much embracing of very, very new age technologies like the metaverse, cryptocurrency, decentralized finance, and so much more. So all of this will obviously be beneficial for banks in the long run. As we live in a very tech-savvy world, banks are simultaneously also trying to move towards a more customer-first approach to incorporate growing needs of their consumers. So how do you think the COVID crisis impacted your own personal experience and, of systems and banking systems around you? Be a part of this conversation on Instagram at Capgemini India. I'll see you on the next episode of Capgemini's Techipedia series.
There's a quick survey to fill out on ivmpodcast.com/survey. It lets us know a little bit more about who's listening to us. And you know what? We're going to do a few prizes. So, we'll do a random drawing of maybe 10 people and we'll send you all some swag. Remember, that's ivmpodcast.com/survey where you can fill out the survey. Hello, everybody. Welcome to another great week on the IVM Podcast Network. This week on Cock and Bull, Cyrus joins us from Spain. Shreyas, Nivedita, Antariksh and Abbas discuss PM Modi's blog post. Introducing our new Marathi show, Don Baika Gappa Aika. In the first episode, Aparna Dixit and Avanti Damle discuss the fast-paced life of Gen Z and how tiring it is to be the cool parent. On Pesa Vesa, Anupam meets Ashish Kumasta, Managing Director and CEO, Julius Baer, India. They discuss key wealth management trends. The Simplified Gang talks to Samir Mohan, product marketer at Fisdom, about all things investments. On All Things Policy, the Takshashila folk discuss the role inequality and economic prospects play in political violence. And on the Life Manifestos, Arena celebrates the Effective Communications Month of June. And just a reminder to everybody, the IVM merchandise is now available. You can go to the IVM Podcast website and click on the shop tab. Check out our first collection of t-shirts. Also, do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And I'd like to remind you all that it is really, really helpful for us when you do recommend this show or any of our other shows to a friend. Word of mouth is great for us, and it's really a great way for us to grow our audience and have more people for you to discuss your podcast consumptions with. Also, don't forget to rate us on any platform you're listening on, and you can also check us out on YouTube at ivmpodcast.com/YouTube. We have a list of the YouTube channels we are on. And finally, we'd like to thank our sponsors this week, Capgemini, Intel vPro, and Intel Future Banal Wonderful. Thank you so much for making this possible.